Top of the morning, traders. It has been another incredibly slow day of trading in Asia and Europe, and now the focus is switching over to New York. In New York today, the news flow is kind of rather slow. We have the highlight is we have the Fed Beige Book, which I believe comes out at 2 o'clock, which could give an indication of a more accurate indication of the strength or weakness that we have in the general economy. Let's take a quick look at the majors, and we will just go over and what do we see as possible trades and near-term future. We'll start with the USD CAD because the USD CAD is extremely range bound. The top of the range is at 98, the bottom is at 97.35. All we're looking for in this pair is a break above or below the range. Push above 98, we can see it move much higher, towards 98.50 at first, and then up to 99.50. Any move down to 97.35 could attract buyers for a push higher. Let's see the New Zealand USD. As you can see, is still basically trending lower, and we have a descending trend line that comes in around 1.8125 that could cap any price action to the downside. It looks like we're going to have a strong 4-hour close here on a bar. If we get if this is the close, it's still 2 hours away. Resistance is up at 82.20. It would take a break of that level to open the pair up for anything higher, and our first target would be up at 83. But right now the pair is sitting mid-range, as basically is the CAD. So there's no real trading opportunity right there. The Aussie has done well today, and I guess I just read that it's one of the factors for the Aussie strength is that iron ore is up big today, up 6%, and that is Australia's biggest export. The pair has basically just been consolidating though since moving down to touch the 101.75 level to start the week out. Right now, until the cross moves up above last week's Fridays and Thursdays highs at 102.70. There's really nothing. There's no clear-cut trading from a price action standpoint at this level. But if we do break above 102.70, we could see a push up towards 103.25, and then even further if we break that 105.20. But if we do break, if we move back lower into the 101.75 and 1.050 level, it would take a break of this level to get a push down to 101 and then to parity, but right now this pair is sitting mid-range also. The Great Britain pound, frustrating at best that this pair has broken below the trend line on Friday. Basically we had a very quick push in the middle of the night, but since that time the pip has basically been sitting right on the 0.382 fib from the larger move down at 160. As long as this level holds, there's really no as long as this level holds, I guess this level I'm trying to say is going to be the bull bear line in the land of sand. As long as the pair holds above the 160 level, we could see a push back up higher, initially targeting 160.50 and then the trend line at 160.86. But if we break below this, that opens the momentum for a move down to the 50 fib at 159.03. But until we get a clear-cut indication of direction in this cross, this line is just going to be the resting place, and there's no clear-cut decision or trade to be made. The euro also similarly has just been drifting sideways, frustrating at best over the last basically 24 hours. We did have a push down in Asian and European trading yesterday because the pair did break out of the fib range that we discussed at 0.382 at 129.44, and it moved down towards the 128.50. We have resistance here we have resistance if you look on a daily chart at support at the 128.20, and that's the 200-day moving average. Now 128.60 is significant because if we add an indicator here, an exponential moving average, we'll make it a 200-day. You can see that's coming in right here, right now, around the 170 level. So that could be creating a bit of support for the pair at the moment. I don't want to keep that indicator on my screen. What I'm looking for though is for any move down to 128.20 and to see what kind of price action we get there. If we bounce, we could easily see a move back up to the 0.382 fib at 129.40. If we break below though, it could be off to the 50 fib at 126.10 to finish the week off. If we look at the Aussie JPY pair, as you know, on this break here, if we look on a 1 hour chart, on this break lower here, I went short the pair at 129.67. The pair has since moved back up. I was looking for a break of the trend line for a push down lower towards the a little bit of a momentum, but these pairs seem very content just drifting sideways so far this week. It'd be interesting to watch this cross when it gets up to the 80.25 level to see if it has any finds any resistance at that level for a pushback lower. If we break above though, we could be on our way to a retest of the 80.74 level. The Great Britain JPY is drifting sideways. A pair of interest though is the Euro JPY, because if you look at this in a larger context, you can see that the pair is sitting in a triangle and is testing the bottom of the triangle. We could get a bounce off this level. We could be on our way to 101.40 and so forth. The yen is in a consolidation zone. It's been basically drifting sideways for the last 2 days. The top of the zone is at 78.76. The bottom is 77.40. The CAD in New Zealand, as usual, are just kind of drifting around. New Zealand has bounced a little bit off the bottom of its trend line. Its resistance level. It's actually in a very tight, well not tight, but very defined range. The top is 65, the bottom is 63.80, and the pair has been bouncing off these levels over the last week or so. All right, everybody. So right now the markets are pretty much range bound. There's the great trading opportunities. I don't see any at the exact moment. The euro sitting mid range. The pound is the one pair of interest sitting right at 160. The Aussie is trying to push higher, but is still not at a significant level. Same with New Zealand. The CAD. So I'm going to keep my eye on the euro today heading into trading. Sitting at the euro sitting near the 129.40 level, and watch this 4-hour candle and see how it plays out. The pound, as we discussed earlier, and the euro JPY, because it's sitting at the bottom of its triangle support. All right, everybody, let's make some pips, and I will keep you guys updated on the Twitter feed.